Irrevocable Life Insurance Trusts. That's the topic of this investment in today's general finance lesson. How it works, are they useful, and why some may have a different opinion. I'm Jonah. I'm one of the banking bros at the Cash Compound, and I'm cracking the code today on this saving and investment term, ILIT. Individually owned life insurance policies face exposure to creditors during the owner's lifetime, only in some states, and estate tax on the death benefits. Use of an ILIT can keep the policy from creditors and the proceeds out of the estate. So here's how it works. The ILIT holds a new or existing life insurance policy on the life of the grantor and, of course, a spouse. If the grantor initially funds the ILIT with cash to pay premiums, any ILIT income earned will be taxed. More often, the ILIT is unfunded, and the grantor makes annual gifts to the trust to be used as those premium payments. With crummy powers, these gifts qualify for the gift tax annual exclusion. If you haven't seen that video or don't know what that means, go check out one of our other investments. Crummy powers are trust terms that grant beneficiaries the power to withdraw transfers from the trust. The grantor may not serve as the trustee of the ILIT and may not have any incidence of ownership in the life insurance policy. Now here's why it's useful. The ILIT is a flexible planning tool that shelters the policy proceeds from the estate tax and also from creditors. An ILIT does have setup costs and continued funding obligations. Now here's why some might not like this plan. It's all about setup costs and understanding. If I've said it once, I've said it more than 1,000 times. Just because you do not understand something is not a reason that that thing is bad or that it won't work for you. Take the time to understand, and you might realize that a few $100s of setup costs will end up saving you a few $1,000s in the event you face a creditor one day. Or, of course, possibly a few $100,000 when it may come to estate taxes. Now, here are my thoughts. My recommendation is to use a trusted professional when exploring this option because, again, not having proper understanding can cost you. Now, I love life insurance. Obviously, for Irrevocable Life Insurance Trust, you also need to own life insurance. The type of insurance I teach about, however, isn't just so you can give money to your family or friends, church, or charity after you're gone. The type of life insurance I teach about is all about cash flow. Using money now so you can buy the things that your family needs or wants today. Most don't actually even realize that's an option, but just because you didn't know before now doesn't mean it can't benefit you. You can, of course, personally click the link in the description to see my video on how you can obtain life insurance for benefits you can use now while you're still alive. Are you ready for it in under 60 seconds? Here's your ILIT Investment Minute. An ILIT is an irrevocable trust that holds a life insurance policy that will provide estate liquidity and help with beneficiary needs. Because the proceeds are outside of the estate, they avoid the federal estate tax, leaving more money to pay estate expenses or for beneficiaries to use. Thanks for tuning in to today's Investment. I hope you learned something about irrevocable life insurance trusts. Make sure that you subscribe to this channel so as we create more investments and teach you everything you need to know about business or estate planning that you don't miss a second. We'll see you next time.